Morning, Steve Free in Chicago with the morning grain comments. Happy Friday, everybody. Yesterday we had a positive reaction to the USDA July report. Even though the USDA raised U.S. soybean stocks to record high and world stocks to record high, the soybean market tried to look as the glass was maybe half full, and that maybe we'll see that most of the bearish news is out of the marketplace for now. Corn and wheat rallied. I think corn found support in the fact that USDA did not raise end stocks as much as people feared. And in wheat, they lowered world wheat stocks. Overnight, though, beans are down about 10 cents, corn down about 3, and wheat's up about 3. And I think when you see the headlines, market is finally trying to digest oversupply. The Chinese soybean futures last night dropped to the lowest level in 10 years, worried about this type of trade war between the two countries adding to a glut of world soybean supplies. The wheat market, I think, is, again, finding support from the fact that, we've now gone from talking about ample world wheat supplies to the fact that the USDA on Thursday said that the data suggests wheat stocks to use ratio globally will fall to the record low level by the mid-2019. And there are some people that feel, let's move forward early in 2019. If the Russian crop is still small and they slow their offers of exports, maybe the United States might get some of that export demand. So, at that point, when we start seeing export demand in the U.S., wheat futures may actually start moving higher. Corn market, I think, again, it's all about weather and the yield. The USDA's yield probably is too low at 174. Some people are at 176. Others are at 179. And that makes a big difference between where corn prices go between now and harvest and what they do after harvest. For the week, wheat prices in Chicago's down 25 cents. Corn is down 17. Beans are down 50 cents. Meal down $12. Soybean oil is down about 100 points. The interesting thing is that board crush margins for soybeans continue to go up another 17 cents and around $2 a bushel. So all in all, kind of a lot of different things happen to different markets. Soybeans should continue to trend lower on too much supply and trade wars. Corn market, it's all about weather. Leak a little bit lower as long as the weather is good. And the wheat market could find support because of lower world supplies. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.